Hi there, it's Ivan again. In the previous video, we've already considered how to trade on the stock exchange and discussed one very cool, simple strategy. After that, so many of you wrote to me, Ivan, thank you, very cool strategy, and already started making money. Is it nice? In fact, write your results below. It's a great deal encouraging to create new videos. Well, now let's see what types of orders exist on this stock and touch upon some other points. There'll be a series of lessons. I myself trade by the BitMEX signals. These are not the signals that everyone is used to and don't give a damn about. They are real guys who trade very well on the stock exchange, unfortunately don't take controlling, yet giving very clear recommendations. I traded on their recommendations, but not only. Look, this is one of my accounts, started April 19th. I enrolled 0.2003 Bitcoins. Then they took the commission. So now I've got like 0.57. That is, the deposit almost doubled in 10 days. Suppose it's not bad because I wasn't trading very often. Well, now let's move on to orders. Consider what kind of orders are there. So many different ones exist. This is another reason to love BitMEX. Let's get started with a market order. It's already on. Here you can choose this thing. Oh, and if you didn't switch the display mode to advanced, then do it right here by pressing this button. In a market order, what does that mean? This means you buy at the lowest price available now. That is, just here, there's a market depth for sale and purchase respectively. If you buy, you'll take it at the price of 93.11 and below then. But considering the number of orders here, the application there for $260,000 now stands behind 418, so there are many lots near the spread. It's the highest liquidity on the BitMEX exchange. Now over the last 24 hours, $2 billion have been traded here. Quite a lot, you know, and still not much. There were 3 and 4 billion previously. Holidays, I don't know, weekend, something else, or Bitcoin just in flat because it's not interested to trade. Nothing really happens. Not clear where it'll go, so now everyone caved. That is, with a market order, you simply buy at the moment when it's needed quickly. Choose the number of contracts and leverage here. It's advisable to trade with leverage not more than 25. At first 5 or even 3 is better, so as not to expose yourself to unnecessary risk, because the higher the leverage, the higher the risk, respectively. The risk and liquidation are closer. But on the other hand, if you enter a trade with small deposit percentage, I recommend no more than 10, 15, 20% maximum. Then you risk only this part. Not all of the deposit as on some exchanges. The part you enter this transaction with is shown here. This means the cost is actually how much your money with this leverage and number of contracts you'll give 0.045. After pressing the button buy or sell, this window pops up. Just don't put a tick here because the next time it just doesn't appear and you immediately buy. And here the cost at 12x is shown. I don't know why 12. Although the leverage seemed to be 25, let's put it. The exchange, by the way, is overloaded. It sometimes happens. The leverage seemed to be set 10. Let's put it back 25. It's strange why it's overloaded right now, although there seems to be not such a big flow. It's, by the way, one of the stock's drawbacks. Not everything is so smooth. It happens that you are beating up orders. That is, you try to place an order, but it is constantly thrown back. You press again, press, maybe 10 times until your order is placed. During this time, the price may change a bit here and there, of course, and you have to adapt to the matter. Here I'm going to buy the market with a 25th leverage. I'll give 5,000 lots for 5,000 contracts. It's $5,000. Amount of the order is Bitcoin transaction volume 053, but I'll pay only 0.022. So I'm risking myself with these funds, well, relatively speaking, $200, and I buy for 5,000. Risks and the percentage of earnings aren't comparable. Therefore, you risk a very small sum of money. If the price goes in the direction needed, you earn a lot. 25 times more than you'd earn without leverage, for example. The liquidation price is 8,988, quite low frankly speaking, but the price should go down by 3% if you enter the long buy to be liquidated. Now, with a market, everything seems to be clear, a little higher commission than for a limit order, but it's a tolerable kind of thing, so no reason to bother. Especially if you have a discount on commissions there. Register on your link there and any other. It's not so noticeable. Next, the limit order, a whole bunch of them. Limit order is like putting an order to buy or sell. It'll be somewhere here, hanging out in a market depth. When the price reaches it, or a person appears to buy or sell at this price, the application will be fulfilled and you'll have these Bitcoins. Or sell them depending on which way you put the order. How does it work? Similarly, set the transaction volume and price you want to buy at. Well, for example, I'll show you. If we want to buy below the market, lower than the price now, for example, I want to buy there at 9,240. I write here 9,240 and press buy. Order is placed. Here it is displayed green in a dotted line. The volume is indicated here, and if we click here, then we can drag it or edit it below. Again, below or above, it depends on your interface. Because everything is very fast here, it is easy to set up. That is, I can narrow down this panel, for example, and expand it, make it full screen, and so on. So I build it for myself in this form because it's more convenient for me. I like to see closed positions at the top here to see a profit in an open position for the whole line. Well, here you'll have an open position. The button's red, which should be visible without covering. That is, otherwise you will have to flip it to the left or right constantly. It takes time to see. During this time, the price may go somewhere wrong. If you need to sell quickly, then you just can't do it quickly. So in general, I have customized them for you. You can do the same, and if you want to move this order, you either move it here just with a mouse, and it's moved to the desired position, now 9,200 aligned up. Or here you can edit the number of contracts, the price, well, respectively, and see other parameters. Here, this order can be canceled by clicking here or here, cancel everything, cancel it specifically. Done, it's canceled, and left the diagram. We can continue to work. By the way, here there is a drawing panel. I'm also planning to make a separate video on the interface, but if you need this drawing panel, if you're used to building lines of support and resistance there, some other things you can also do this, but the height of the window should be a little bigger. That is, it'll not appear that way. If you expand a little down, then the drawing panel appears. For those who need it, I think it'll be relevant. Let's move on to the next order and decrease tick. There's concrete and substantial explanation of what it gives you if you put, for example, several orders. For example, we went to long by 9,200 and then price drops by 9,000 exactly, let's say. And you want to buy a position here, but also to sell everything that you have in case the price reaches, for example, 9,450. Here you're placing a sell order. Here you place an order for additional purchase somewhere down here, for example, right here, and you don't know where the price will come. At first, it can reach the sale level and then the purchase. You'll have another position here or not give here, but then sell right here, and how much volume you'll have at that moment, nobody knows. Because if there's an additional purchase here, then the volume on sale is higher. And you don't know which one to bet so that you're not suddenly turned from a long to short or vice versa. If this is a decrease, there is another order that I will show you a little later. But the essence of decrease tick is that if you have an order, take profit, where you establish profits, well, there you close the position. So you can specify here, for example, I don't know, not 5,000 contracts, but 25,000 contracts, and put it here with a decrease tick. Then this order will only reduce your position, but not increase. That is, if your position, for example, somewhere has already been sold there, and after that it reaches this price, then you have nothing to sell without this tick. You put a short here, that is, sell it, open a sell position, and then you'll have treat short. Although the price can go up this way so that I clearly can't expect, I don't know about limit orders. Most likely this trick won't work for large volume, but at least it will not turn you and sell part of the contract. Otherwise, for limit orders, I think it is more than clear. Set the volume, set the price at which you want to buy or sell, claim the order, and wait. As soon as the buyer or seller for your transaction appears, the order is executed. Then there are a number of stops, and it's getting amazing, so let's see. First, on a market order with the fixed profit. Yes, there are things that I just said. Now there is immediately a tick, close the trigger. It's the same as decrease tick to reduce the position as soon as the price reaches the trigger price. Well, for example, here you have bet, yet the order has fixed profit taking. You bought here, for example, and want to sell here and put the purchase here. The price can go to the purchase. At this point, you will then increase the volume. And here you can put as many contracts as you like. Let's say 500,000, even if you haven't got. Leave a market sale here with a fixed profit taking, and this order could close all you have. Because the price and quantity you put are more than can possibly be on your account, and it can't sell anything else. And you'll not be turned to short. Just close the entire position as soon as the price reaches this level. As soon as, for example, there are 9,480 euros sold out at the market at the lowest available price at the time, and you will close your position to the volume that you have placed. You can put more so that it's for certain that it'll not sell too much. That's a very cool thing that really helps. The limit is the same as the limit with a fixed profit, only here we set the limit at which you want to sell and trigger price after which this order is activated. That is, if the price comes up, for example, you have gotten here long. For example, the price has reached, for example, 9,400 and you want to sell at 9,440. So you write here 9,440. That's the price at which the order is placed for sale, but here you put the price a little bit earlier because if you put 9,440, then the price can run this level sharply, and accordingly, you won't get the price at the market depth. Maybe you just won't fulfill your order. Although this run happens to be up, it'll sell you on the market, well, that is, in short, and as not to bother, just leave the market fixation of profits. It'll sell you, it'll not happen at the moment when the price is reached, it's set immediately. It will sell you on the market with the limit you have to set two prices. The first stage you want to sell, the second is the price that you will open this order when it is reached. Well, accordingly, the limit stop order is a thing that allows you to reduce losses. That is, if you adhere to a trading strategy, you know that, for example, you're trading there by levels, I don't know, even by some other criteria. So you place it, for example, you have such a kind of trade channel where after breaking, you know that the price will go down sharply, for example. It may not be very good here. It is not very clearly drawn. But to make it clear, I think it'll now be understandable what I'm talking about. That is, if we understand that the price is making its way, then everything will go down. But we set to buy here. Now it should bounce up from this level of support in an extremely large way. For example, let's even buy some contracts. We buy 100 contracts. We have bought 100 contracts, say, put a limit order for sale according to how much we bought here. Let them be 9,298. Sales are short. Well, again, the exchange turns off the applications. Recently, this happens more often because it's getting more people on the stock exchange. Well, it's okay. We'll try again. That's when the price comes here, my order will be executed. But you can also put a stop if don't take such a small value, but a little more, you can put a stop. For example, when you break through that level, if the price falls below 9,220, for example, then you need to sell this position. Because the price, in your opinion, goes even lower after that, you can say the profit is already almost 7% there. But how does market stop work? So let's make it clear with the market. That is, when you put a quantity of 100 and the price stop, when the price reaches 9,220, then you need to sell and tick off, close the trigger. That is, this order can only close a position when this take profit order is on, this market stop, while closing position is useless because you will no longer have an open position, it is just cancelled. Now the stop is set here below market stop. That is a trigger when the price reaches 9,220, we close the position, and it is very convenient. The same works with the limit order, stop order, but here you also set the limit value at which you want to sell and the price of the stop at which this order is activated. Here you can bungle up, so if you don't have an understanding of how to work with it, then the best thing is to put just a market one. It's a Trump variant. The commission here is a little higher. Well, heck with it, it's still a pittance. Now another great order is a trailing stop. Not everyone understands how this works. Now I'll try to explain. A trailing stop is one that is not fixed in exact place. That is, for example, you decided that if the price breaks through this level, it will go even lower and then not return to the top. Therefore, here you're fixing your loss practically, but a trailing stop can be not only for a loss, and in general, any stop, but also for fixing smaller profits than it is now. For example, you bought at this price, then the price went even higher, but for example, it went to 9,400 and got stuck at this level and goes there in the side outset, just consolidates. You have no clue whether it'll be a shot up or down and see the corridor. Well, for example, the price goes from 9,300 to 9,450, and when you exit this order, it is likely that there'll be somewhere either a rise up or breakthrough down, and you're getting profit here already and can fix it. But you think, what if it's still growing? So you put a stop somewhere over this border, and for example, there, if it breaks through, you still have some profit, just less. And if it goes higher, then there it already hooks your take profit order and you sell with even bigger plus. And this trailing stop makes a very cool thing. It pulls up this order along with the price increase. That is, if the price goes somewhere here, then you can simply set the distance to the price. And when the price is, for example, 9,320 and you have a distance of $100, then 9,220 will be your stop loss. Then the price rises by about 9,450 and your stop loss becomes 9,350. That is, it is constantly at a distance of $100 when the price rises, and respectively when the price falls, it stays the same. That is, imagine the situation: the price increased, then plummeted by $50. Your stop did not catch because if the distance is $100, then the price sharply increased by another $100. The order rose behind it and then a sharp fall, there by $500 now. In this case, your stop order will work and you remain in the plus. Let it be a slightly smaller plus, but you hook on this price, as it were, the order will be filled and you will get a profit or not such a big loss. That is, when the price rises, well, or some kind of trend movement, let's say that it can be both long and short, you can pull up this very stop loss with the price, thereby maximizing your profit. Also a very convenient thing. Here perhaps are all the main orders, and more correctly, all of them considered. Be sure to sort it out. I like to trade open positions with at least market orders, fix them with this market price with profit taking, because it's easy and quick to install and you don't have to constantly look there for prices as if with short trades. That's just a murder, constantly setting the price of limit orders. I don't really like it. Of course, tastes differ. As they say, yes, well, I like to trade the market. Watch, ask questions in the comments in the following videos. I will tell you more about funding. There's a financing rate we will also talk about separately. About this index, what it generally means, what is it, and also about other nuances of working with this exchange. Be sure to watch in the following videos. Put like, subscribe to the channel, not to miss new videos. Below the video is a free course subscription. Also be sure to watch, there's a lot of useful information. See you in the following videos. Yours, Ivan. Wishing you success and profitable trade. Bye.